Tonight we got results from Levi, Strauss & Co., the iconic denim company with a stock that's nearly doubled from its lows last October, despite all the hand-wringing about the consumer. This time Levi's reported what technically looked like a mixed quarter, and an ever so slight revenue miss paired with a substantial 5-cent earnings beat off an 11-cent basis. While management left their full-year forecast intact, not ideal after an earnings beat, they also spelled out that they expect a 5-cent earnings hit from their new logistics strategy and an increased marketing budget in the second half, along with currency fluctuation. In other words, despite these new costs and investments, Levi's can still hit the number they previously guided for. That's exceedingly positive. You don't get a stock up 40% for the year for doing nothing. Sometimes this market has trouble appreciating nuance. So let's take a close look with Michelle Goss. She's the president and CEO of Levi Strauss & Company. You get a better read of the situation. Ms. Goss, welcome back to Mad Money.
Hey, Jim. Great to see you again.
Great
to be here.
You've just been crushing it, taking advantage of what is a remarkable wave in denim and then really augmenting it. Tell us how you were able to, with inline revenues, crush the earnings estimates.
Yeah, well, to that point, Jim, I mean, we were thrilled to deliver another strong quarter, up 8%, reported up 9% constant currency. And to your point, with a very big earnings beat. And we're expecting this momentum to accelerate in the back half of the year. And first and foremost, it starts with growth. And our DTC business is just on fire. I mean, we delivered another double-digit quarter. We were up 11%, driven off of 9 consecutive quarters of strong comp growth. And then the second shout out I would give you, Jim, is on our women's business. I mean, our women's business, we've been at this for a while, but we are amplifying it and sharpening that strategy, and it's working. So our business was up over 20% in our DTC channel. And then to your point on profitability, that's a very big focus. We delivered record gross margins this quarter and are driving a lot of efficiencies through our key enabler, Project Fuel.
Okay, talking about the strength of the consumer, a lot of people are hand-wringing about the health of them. I feel if they get a deal, if they get a bargain, if they like something, they're spending it. It really is not a consumer who's strapped. It's a consumer who's just more particular.
Yes, I completely agree with you on that. I mean, we see our consumers as being really resilient, and we're excited about the category. I mean, as the category leader, it's our responsibility to drive a lot of innovation and excitement. And I think we're doing that in a couple ways. One is driving the next evolution of the trend, which is going baggier and looser and wider across both men and women. And then also this whole head-to-toe denim lifestyle. I mean, that's really our new focus is, yes, continuing to own jeans, but taking that denim top to bottom. Things like denim skirts and denim dresses, which historically not been big businesses for us. I mean, they're exploding up triple digits in the quarter.
All right, but let's talk about you. Talk about fashion, talk about excitement. Obviously, anybody who likes Beyonce, like my wife who plays this endlessly, talks about the new album. It's a country album, but it's got a Levi's jeans song. And what's that meant for your business?
Yeah, well, I would first say, I mean, we could not be more humbled, more honored, and of course excited that the fact that Beyonce, who is such a global cultural icon, would name a song after us. You know, and this is we've had a relationship with her over a decade. So like I said, we're just so honored about this. You know, as it relates to the business, our business is really being driven off of the key strategies that we spoke to, the strength in our direct-to-consumer channel, globally, strength in the U.S. in particular, our biggest market, 3 quarters now of growth, what's happening with women's and what's happening with denim bottoms with this next fashion cycle.
All right, well, when I look at things that I know some people are trying to sell the stock down, look, the stock's been such a home run, I could understand if anyone wants to take profits. But the only thing, the nitpicking I would have was that I was surprised that Europe was weaker. Maybe you can explain that to me.
Yeah, I'd say Europe actually met our expectations, Jim. And we saw sequential improvement since the first quarter. And we're still believing that we're going to see Europe return to growth in the back half. DTC was positive. Our wholesale is improving. And we expect both channels to improve in the back half across the strategies we've been talking about. Women's, denim dressing, denim lifestyle. You know, our tops business, that's been an area of focus for some time. We doubled down this last year, did a whole reset on our tops business, growing over 20%. And that impacts Europe as well.
Okay, excellent. You did mention something just now with wholesale. I was quite impressed. You had the inflection. I was been waiting for it, and you had it. What does it mean for your bottom line?
I think it's an important question, because when we talk about DTC first, which is operating the company this way, and DTC being our key growth driver, wholesale is still really important, right? I mean, we're going to continue to reach millions of fans around the world through wholesale. We saw improvement from Q1 to Q2. We expect that to continue, really driven off of, number one, product, right? Driving relevant product. We have so much excitement. I was talking about bag or looser. We're also bringing a lot of fabric innovation. I mean, it's summertime, and we've got a great new performance cool platform that we're launching around the world. So it starts with product across both channels. Women's, again, is outperforming. I should actually mention that women's claimed the #1 market share here in the US, and it's doing really well around the world as well. So wholesale, I'm excited. The other thing it's worth mentioning is last year this time, we were struggling with a lot of headwinds in our supply chain. That's all behind us. So we have seen a step change in execution from a year ago.
Now, I know Mr. Singh, Harmit Singh, is just a great CFO, one of the best. I've known him for a very long time. Yes. So why don't you just tell us how he's doing with Project Fuel, explanation for what's going on there.
Yeah, so great question. So Project Fuel it's going to be a multi-year initiative. It really is a key enabler for us making this pivot to be a DTC first, retailer, omnichannel retailer. And we have our sights set on growing this business. We're, again, pleased what we've seen the last couple of quarters, but growing this business to be $10 billion and expanding our margins to 15%. And Project Fuel is a really critical part of that. We have multiple work streams across the company. I'd point to a couple. One is, we talk about being a retailer, it's getting that productivity and profitability up in our stores. You saw our numbers this quarter. We're making good progress. You're seeing the results. That's going to continue forward. Rewiring the company to be faster, more agile. So our whole go-to-market process is getting a lot tighter and shorter. That's another one. Indirect procurement. I mean, the list goes on. And again, great confidence that we're going to ultimately drive a lot of growth up to that 10 billion, 15%, but especially on the margin side. You saw it this quarter, and you can expect to see a lot more in the coming months.
Yeah, when you have gross margins of 60.5%, up 180 basis points, I'm trying to think about what other apparel companies are delivering those numbers. They're very hard to come by. I don't know. Maybe you just quickly explain that this is not an easy number to reach.
You are absolutely right. And it is a good bellwether to the health of the business. And we have many work streams that are feeding that. I mean, first of all, it certainly starts with our cost of goods. And as you said, that number, it's a record number for the company. We are so proud, and the teams have been working really hard. So relative to our supply chain, cost of goods coming in, exceeding expectations, our DTC penetration driving a lot of great favorability there to our conversation we were just having, higher full price selling in our direct-to-consumer channel. So all of these things are helping us support, that gross margin, which, as you know, turns into gross margin dollars, which helps us get that leverage on the bottom line.
Well, just terrific work. Thank you for coming on. Once again, the stock has been a rocket. Some people may not understand. It's a little harder to understand this quarter than it was the previous one. But the fact is, the bottom line was fabulous. Top line's good, and you're doing a fantastic job. Michelle Goss, President and CEO of Levi's. Thank you.
Thank you so much, Jim. Great to be here.
Absolutely. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.